Hey, welcome to the show. So as you can see with a heat map of the S&P, markets fell Friday, ending the week lower and snapping a 4-week winning streak. Health technology and health services were the only two market sectors that were up for the day. Crypto fell harder with the big boys leading the way. Bitcoin down 8.39% and ETH down 8.64%. ADA down 10%, Solana down 6.83%, and for the upset, one of the few cryptos positive on the day was our beloved Polygon Matic, with almost a 1% gain. That is a very positive indicator that smart money is buying the Matic dip. And surprisingly, SHIB was neutral on the day, which I'm actually going to interpret as bullish. That wasn't the case for all the meme coins, Dogecoin being down 7.10%. For at least this last Friday, SHIB was top dog. So many of you may be asking, why did the market sell off? Well, I'm going to offer you 3 answers. We simply hit the historic lines of resistance that most traders were looking at. I pointed those out to you guys Thursday. The markets also needed to digest the last 4 up weeks that we've had. And investors are second guessing the Fed's goal of taming inflation. We have the September Fed meeting fast approaching, and the big question that's been floating around Wall Street is, how sure are we that we're going to get a second positive CPI reading? Is peak inflation really in the rearview mirror? So Fed's continued aggressive rate increases are back in focus. A gentleman by the name of Frank Bullard, a central bank official, made the statement that he would lean towards a 0.75% increase in September. That, my friends, has not yet been priced in. We've only really been looking at 0.50% increase. He stated, "I don't really see why you would want to drag out interest rate increases into next year." The markets really didn't like that. Don't forget, 40% of all US dollars were printed in the last 2 years. 40% of all the existing money was printed in the last 2 years. Do you guys think that's already been addressed with a simple 2.5% Fed funds rate? I don't think so. It's a lot of money in the system. Some of the biggest gainers over the past month were the market's biggest losers on Friday. Bed Bath & Beyond, BBBY, dropping 41% to $11.03, making it their biggest one-day loss ever. AMC fell 6.6% to $18, which was the exact price I called in the comments section Friday, which was the next level down in support. I answered a bunch of you on a number of stocks, but y'all were sharing your entire portfolios and expecting a response from me. Anyways, it was putting me on overload. I got back to as many of you as I could. Another big indicator that I talk about all the time is the dollar index, which rose on Friday and had its highest 1-week rise since March, which I've said many times is very bad for stocks. If the dollar's going up, the markets will go down. I'm going to try to burn through a handful of stock charts, and I'm going to give you a quick overview. You guys can use this as an opportunity to better understand charting, and if you're in these plays, you have my perspective on how they're doing. First, our beloved verb play. Let's check out the chart. This is simple. I called the top of the recent run at 89 cents. It hit 0.889. I told you it would come back to the 50-cent range, and that would be our next buy. 50% of you made between 50 and 100% profit on our last swing trade. That was so much fun. Don't overthink it. This is the buy zone. You should be 2/3 of your total position in at this 50-cent level, leaving 1/3 in case we break significantly below down to the low 40s to bring your average buy price down. Your average buy price should be no more than 50 cents, and our goal will be to make 50 to 100% on the next swing. It is always scary to buy when the price is falling down, and it goes against your natural instinct. Normally, people want to buy when things are green and they're making new highs. But if you don't break that bad habit, you're not going to become the more mature trader that all of you guys can be. Second stock, SBET, SBET. Entry price between $1.30 and 90 cents. Same rules apply. Break up your total purchase into 4 or more orders and buy only if the stock has dropped significantly in price. The first sell target is $1.60. Then the next is $2.20. If you practice these disciplines, you guys are going to thank me later. Third, TCRT is still in an upswing. As I mentioned at the beginning, healthcare sector was up on Friday. So consider taking profits below $2.20. Number 4, skills. My stop loss got triggered. I haven't got back in yet. We are still above the 5 EMA though, so the pop may still be pending. Number 5, BABA. So much to say about BABA. I should do a separate video for you guys about BABA. BABA has been my most successful swing trade in the last 6 months. I'm waiting to get back in, specifically looking for 2 green higher high candlesticks above the 5 EMA. And finally, Google. Why Google? Because if these markets go south, some of my smaller swing trades are not going to perform the way I'd hoped they would. But my larger long-term investments just get more and more attractive. I'm going to leave a video I did about Google at the end of this video. If you haven't seen it, watch it. Every share of Google purchased under $120 for me is an absolute win. I view the future price hitting $400 due to their growing ad revenue business after the recession and their extremely profitable cloud server business. The future is crypto. You're like, Josh, I thought you were talking about Google. The future is crypto, and metaverse and cloud service giants like Google and others are going to own the universe that's going to affect our everyday lives. If you want to follow my trades from day to day and join my small account challenge, then download MooMoo app pinned in the top comment and also in the description of this video. They're offering 13 free stock if you participate in their full promotion, which could be a value of up to $32,000. Yes, it's like playing the lottery. And 10 free stock for simply depositing $100. If you've started the process but you've not funded your account, then today is the day to get MooMoo because this is their best offer to date. This is an exclusive limited time offer specifically for a handful of YouTubers. You can also find me on the MooMoo app, join my community there where I'm actively posting. So in conclusion, we're 18% off the lows, and I still think we're going to see some sideways grinding action through the rest of this month. A downward apocalyptic move has not been confirmed, so we can all take a deep breath. And until I see a break of the weekly EMA, I am still anticipating the next leg up. Check out this report that the institutional money managers are still overweight in cash. There is still a ton of money on the sidelines that has not been put to work yet in these markets. And as I've said before, money managers don't make commissions babysitting cash on the sidelines. When this happened back in April of 2020 and December of 2008, and March of 2003, those were all times that you wanted to be buying the markets. In addition, expectations for a recession are also outrageously high. They are as high as they were in those same time frames when the markets had already bottomed. These are not things you see historically at the tops of the markets, but rather you see that money sitting on the sideline and you see that bearish sentiment at the bottoms when people should actually be buying. So market direction is actually not clear. I'm still leaning towards a bullish trend until proven otherwise, but there is still a case for a bull or bear market to be made. So hey guys, leave me a comment. Let me know what you guys are buying or selling, whether you're bullish or bearish. As always, I appreciate you guys joining me. Peace and blessings, my friends, on this weekend. I'll see you in the next video.